And looking at the market there, the NSE 20 just down slightly there, 4,600. And then the shilling, which is said to be weaker on news of that Egyptian unrest, 86.95, moving closer to 87 there. Well, for the Kenya market update, we're joined now by Eric Musau, who is research analyst at Standard Investment Bank. Good morning to you, Eric. Let's perhaps start with that report about the vulnerability of the Kenyan economy and the currency to the unrest in Egypt.
Yes, certainly. I think it's something that we are watching keenly, hoping that the situation will not persist for very long, and that stability will be restored, and that the Egyptian buyers will be back into the market. Obviously, tea is a very important commodity for Kenya. Actually, it's a leading export commodity, and so the leading buyers are really Middle Eastern countries, and along with the UK. So Egypt is a very key buyer.
Yeah, and then let's look at some of the other shares there on the exchange. East African Breweries has raised beer prices for the second time in 4 months. That's pretty unusual, clearly to do with input prices. And would this affect the share price at all?
I think what this information sends to the market is that probably they are struggling on moving volumes, and so that's why they are really taking this decision to hike prices in order to sort of support profitability. I mean, they've just closed their full year, so we are really awaiting their full year for 2013, the period ending June, and we think those earnings are probably going to be a little bit disappointing to the market. But what they're probably going to do is to sort of set the pace and tell investors that they've raised prices, and they think maybe in the coming year things are going to improve.
Of course, they'll have to drive volumes even though they are raising those prices, because they had a drop in profit of 14% for the 6 months to December. So they're wanting to reverse that. Prices could help, but then they don't want the prices to affect the volumes.
Yes, and if you look at also the brand which really drives most of their volumes, the Senator Keg, and if you look at the duty remission that was actually reduced in the last budget, it just tells you from a volume perspective it's going to be really difficult for EABL in the coming year.
Okay, and then let's move. I always find it interesting talking about Kenya Airways, where government has a big stake, and a report that the government in Kenya is wanting a bigger stake than it has already, and commensurate with that, reducing the stake, particularly of foreign airlines. KLM seems to be the one there because it has more than a quarter of the shares, and the view that perhaps it's not adding value.
It's really difficult to see what argument they were making. I think it was a discussion between the parliamentary committee and maybe the minister in charge of infrastructure, who's essentially Kenya Airways falls under that docket. In my view, I think the government could do a lot more in supporting Kenya Airways by fixing the infrastructure. Particularly the airport expansion has really gone slowly. Even domestic infrastructure, because they really depend on tourism. So fixing security in Kenya and doing a lot more to encourage tourists to come into Kenya and more travel in and around Kenya would really provide a lot more value addition to Kenya Airways than simply increasing shareholding. We've seen other airlines where governments are major shareholders across the continent. They really struggle, and eventually, generally we know governments are not very good at running airlines. And despite the volatility of the airline industry, and we know for sure Kenya Airways is suffering, I don't think that's really going to be the right step, and it might not actually improve the position of Kenya Airways as a competitive airline.
How likely is it to happen? I mean, as you say, it's been discussed with a parliamentary committee, but the quote there from the principal secretary of the Transport Minister, Mr. Nduva Muli, he told that committee, the time has come for us to review the shareholding of Kenya Airways. The European carriers will not add any value. They are collapsing. That's quite an extreme statement to make.
Yes, I'm not sure under what circumstances he was giving that statement. But I would imagine KLM adds a lot of expertise, especially with regards to training and some of the partnerships that they already have. And they've actually just extended the agreement for code sharing for another 7 years. So in my view, maybe I'm not sure exactly in what context he was being quoted under those circumstances, but I don't really agree with him, and I think for Kenyans to really thrive, then you'd really need to have a lot of supporting mechanism, but not really direct government shareholding.
So clearly some way to go on that issue. And then ARM Cement, they've had numbers out. The first half profits up 28%, higher sales obviously, and clearly expectation of growth in the economy and lots of construction.
Yes, obviously not as strong as maybe the market would have expected for the first half, but understandable because the government procurement, was subdued quite a bit for a big portion of the first half. But they are mentioning about the second half, and we've seen more construction activities likely to pick up, especially from the large infrastructure projects being fronted by the government. And we think that's going to be very positive for ARM, especially because they're also they've actually put up additional capacity, which as it comes on stream, it will match with the demand which is coming through in the market.